This guide will walk you through setting up an SPV on DealPoint. A special purpose vehicle is a structured investment entity that pools capital from multiple investors, known as limited partners, LPs. These LPs invest into the SPV, which acts as the fund, and then makes a single investment into the target company. With DealPoint, setting up and managing an SPV is simple, compliant, and hands-off. DealPoint acts as the general partner, taking care of entity formation, tax compliance, and investor management. The process is seamless and fully managed, with digital investor onboarding, efficient fund transfers, and automated compliance handling. The SPV operates as a BC-based limited partnership for its flexible regulations and tax efficiency for Canadian investors. Let's walk through how it works on the platform. Step 1. Submit the required information to set up the partnership form and the deal room, where investors will begin the subscription process. Step 2. Get the target network ready and send email invitations to invest. Investors must be Canadian accredited investors. For US-based investors, a separate US SPV is required. Step 3. Investors complete a guided onboarding questionnaire and then sign documents all digitally, at their convenience. Step 4. The SPV organizer, the target company and any other permitted administrators can track real-time investment commitments in the console. Also, fund transfers are managed by DealPoint with pre-authorization debit. Step 5. On closing, the SPV invests in the target company, consolidating all stakeholders into a single line on the cap table. Lastly, DealPoint handles investor distributions, yearly tax reporting, and compliance for the life of the partnership. Also, the platform provides an investor dashboard to share the target company updates and tax forms with the LPs, streamlining communication and ensuring everything is in one place. With DealPoint, everything is included for a single one-time fee of $11,000, with 50% due at LPA setup and 50% at closing. There's also a 2% GP carry-on proceeds, after expenses and return of contributed capital to investors. The fee to set up your SPV on DealPoint is $8,500 as a one-time setup fee. Additionally, there's a $500 per year admin fee, which is paid upfront for the first 5 years, bringing the total to $11,000. Ready to launch an SPV? Here's how to get started. Provide the target company overview. Share the website, if any, a brief description, key visuals, and any relevant documents for the deal room. Send over the term sheet, as well as the SPV name, target raise, tax residency, bank info, and closing date so we can set up the partnership form. We'll provide with a Google form to easily submit this information. Once we have this, our team will create the deal room and prepare the documents for e-signing. Meanwhile, the investor list can be prepared with names, emails, regions, and optional investment amounts. This will help speed up the onboarding process when it's time to invite them to invest. Lastly, go live and invite investors to complete their documents. For tax reporting, LPs will receive T5013 tax slips, detailing their share of income, losses, and deductions for tax filing. And remember, our team is here with live support every step of the way.